All right, so I'm going to address the elephant in the room, and the question is raw nutrition selling? Are we selling raw nutrition? And the answer is kind of.
I hear the crowd roaring. It's only right with all the pain that I compile for it. I got that ice all in my veins, ready to die for it. Ran 1,000 miles for it.
All right, so to go a little bit deeper into it, raw is growing faster than I think anyone ever anticipated it to grow. We've had no investors come into this company besides us. We have no debt on the company. I think we've taken it to a place that I don't know if any sports nutrition brand has ever gone without taking on capital or taking on investors. So we're at the, sitting right around close to $200 million a year in top line revenue. And I know that to get to the next level in this space, to go from that, 200 million, 300 million a year brand to the $1 billion a year brand, I need strategic investment. And what I mean by that is, whether it be distribution or, some capital to infuse into the business to really grow it, to bring on the people that I need to bring on and build out the marketing team that I need. It's just time for us to make that investment into the business in order to get it to the next level. So about a year ago, we hired an investment bank, and we started putting all of the things together, doing our quality of earnings, doing our audited financials, and just building everything out and making sure that we were running the business in a way where it made sense to someone to want to buy it. Obviously, that turned out really well. We've done extremely well for ourselves as far as the brand, and we had a ton of interest in the brand. So we actually started our process about 4 months ago, and we've got probably 200 interests on the brand. I signed, I think, 200 NDAs over the last 6 months, and it's awesome. But the biggest thing for us was we wanted to make sure that we had investors that were going to make sure that the brand stayed on its true path, that were going to not let us leave or lose the core values that we built this brand on. And ultimately, if that meant getting less money for the brand or a less capital investment or less of a multiplier or I guess you could call it an evaluation on the brand, that was okay, because our goal again is not the money now, it's the money later, and it's building the brand the right way with the right people, with the right partners, and doing things our way. So we ran our process. We found a significant amount of people that we think will be good partners, and we are individually meeting with those people now. So again, the brand is not going anywhere. I'm not going anywhere. Chris is not going anywhere. Matt is not going anywhere. We are going to continue to drive the same quality supplements, the same content. The culture is not going anywhere. And we're excited to utilize the capital to make it better. Bigger teams, bigger marketing strategies, nationwide rollouts of some cool stuff that we have planned. You'll start seeing some of that even before we sell or we get that investment, because we have some really good marketing plans in place right now. But from the outside, nothing's changing on the brand. We're super grateful for you guys. We're super grateful that you guys have supported us to be able to do something this incredible. And ultimately, it's just going to get better. So we appreciate it. We look forward to your continued support, and we love you guys. All right, so today I am going to go through an actual real life how to buy a piece of property. This isn't a course. This isn't going to teach you how to buy this with no money, because you actually need money to buy real estate in the real world. But I'm going to break down a deal, and truly this is a cash on cash value. So I'm going to explain to you everything that I do, or that I learned to do, to buy property and make it, I guess you could say, the right investment for me. Okay. So I was told at a very young age that the way that you make money in the world is you take the money that you make from your job, you reinvest that money into other things that make you money to enjoy life with. And that's what I've done from a very young age. And I think that's really one of the main reasons why I'm pretty successful at the age that I'm at. Obviously not super satisfied, but very grateful for where I am today. So this deal right here, I bought this piece of property in May of this year. And this is a really unique piece of property. So I'm going to go to a photo that you guys can get in. Okay, so here's the aerial photo of this piece of property, right? So this is all the piece of property right here. So there's a unit here, there's a storage unit here. This is a full unit. This is a full unit, and there's 3 units here. So totaling, this piece of property totals 6 units. I'm gonna explain to you how I got to the evaluation I got to, talk about cap rate, and talk about everything that I look for when I buy a piece of property. So this piece was just fully remodeled by the person before me, and it was totally empty. It was fully furnished. All the units were fully furnished. So what you see here is literally how I got the units. So like looking the patio, the living rooms, the kitchen, all of this, it looked just like this when I took over the units, okay? No one was in them, they just finished getting renovated. So that to me was one sign that I could have an opportunity, because this property had no rent roll. There was making 0 income when I took it over, right? So a lot of investors, when they're looking at property, they want to see what a cap rate is. Unfortunately, there was no cap rate to this property because it wasn't returning any cash flow whatsoever. So the asking price on this property was $3.2 million, okay? And when I went and looked at the property, I used my Airbnbs. I have 4 other units on the water in Stewart, in Stewart, Florida. And I used the comps from those locations to figure out what I could get per unit for this location. And I utilized that to come up with the figures that I have. I have them written over here, so I'm gonna grab it real quick. All right, so when I broke this down first, what I did was I looked at it traditionally. And what I mean by that is if I were to rent all of these out in long-term leases, if it was going to be a profitable decision for me. So realistically, the way that this piece of property is set up is, sorry, I'm pulling my notes up so I don't have to remember all of this. There's 4 2-bedroom units, there's 1 1-bedroom unit, and there was 1 studio unit. So traditionally, the 4 2-bedrooms would generate $2,500 a month in rent. The 1 1-bedroom would generate $1,200 a month in rent, and the 1 studio would generate $1,000 a month in rent. So what that basically means is, if I take this and I do this, so traditionally you'd get $10K from the 4 2-bedrooms. You would get $1,200 from the one bedroom, and you get $1,000 from the studio. So you add all this up, and it's gonna give me, and you multiply it by 12. So add all these up, that's the monthly income for the property. You multiply it by 12, and that gives you $146,400, okay? So that's what I would have made, $146,000, sorry, my handwriting sucks. Now, you have to deduct, when I was doing this deal in my head, I deducted $14,000 for a management fee. So this basically goes into like shit that goes wrong, having to repair stuff. I usually put 10% on that for an annual basis to cover the management of the property. It's usually not close to that because I manage my own properties, but at the same time you put it there because you need to obviously figure out if the cap rate makes sense. So that's that, right? Now I also have to deduct, which sucks super dick, just so you guys know, taxes. So taxes on the water for this piece of property, $40,000 a year. So when you take this, you knock it out, it gives you $91,760. And when you divide this by what I paid for this unit, so remember, it was listed at $3.2 million. I ended up getting this piece of property for $2.6 million cash. So I didn't finance it, which obviously you'll see if I financed it, would have been even a bigger disaster. But to get the cap rate of the property, basically what you do is you take what you're gonna make via income from the whole entire year, which is my $146,400. You're gonna subtract 10% for managing the property, and you're gonna subtract the taxes, obviously, because that's a liability that goes with the property too, and insurance. So all of that collectively is leaves me with a total of $91,760. Divide that by the $2.6 million that I paid for the property, equals, I'm gonna just erase all this right now because you see all that. This is what my cap rate would have been traditionally. So 3.5%. 3.5% sucks as a cap rate, just so you guys know. A good cap rate right now is like 7%. Anything over 7%, you're doing extremely well, which is your cash on cash return for the real estate that you have. Now that doesn't include all of the other things that you can do with the real estate by depreciating it, by writing it off, by the appreciation over time of the piece of property just getting more and more value every year you hold it. This is like me putting my money in a bank. If I put $1 million in the bank, and I got 5% back on that money, this is the equivalent of that. So I would be making 3.5% on my money holding this piece of real estate. For me, horrible investment. So what I did, and I guess what I knew to do was I was never buying this to traditionally build this property. I was buying this from the beginning to Airbnb this property. And I already have 4 Airbnbs on the water, which make me extremely good money in Stewart. So I knew that if I did this right, it was going to be no problem to make some really good money on it. So I'm going to go through the exact same thing and what I did to add more value to this property. The first thing I did was this dock. I took this dock right here and I put literally a huge dock across here with 6 boat slips on it, okay? So one of the biggest issues in my town right now is where a lot of the marinas are in our town, there's a bridge, it's a fixed bridge, and it fucks you up when you're trying to go out on the water. And I pay $1,500 a month to keep my boat in a marina on the other side of that bridge, which sucks. So this piece of property has direct access to the inlet. So I know I can rent these out for at least $1,500 a piece. So I'm gonna have Brandon tonight when he goes back take a video, but this is now done. So this, over the last 3 months, I've finished building this out. I got the permits, did it all, but now I can rent each one of these dock spaces for $1,500 minus the space that my boat is at. So that's an extra $1,500 a month times 5 over here. So wanted to go through that so you guys see when I add that into the calculation on this next piece, where it's coming from. All right. So now we're gonna go to what I did. So here is how I did the cap rate to make this property make sense. All right, so first one, I kind of got fucked on because one of the properties, the big middle house, was rented for a year right before I took the property over. So I have no choice, but I have to keep her in there. So she pays me $3,500 a month for her piece, okay? Always, that's all I can get. The other 3 on Airbnb, I can easily make $4,200 a month from, okay? And this is conservative. In season, these same properties, like this one, will probably make $5,000 to $9,000, $7,000 to $9,000 a month all day long, from like December until May-ish. That's what I'm pulling in. But again, conservative numbers, don't bullshit yourself. So that's what those are making. My 1-bedroom is going to bring me $2,500 a month. And honestly, the studio on Airbnb is probably going to bring me the same. So $2,500 a month. Again, super conservative, right? So now, from before, this was like $10,000 a month. This brings me $21,100 a month, which is double what the other one was. Now I have 6 slips, right? 6 boat slips that I talked to you about. And those 6 boat slips at $1,500, again, very conservative number when it comes to what I can rent those for. I told you I pay $1,500 a month for a slip on the other side of that shitty bridge that's always closed. So people will pay a premium to not have to wait for a bridge. So that's $9,000, okay? So adding those 2 things up, so if you take that, that's $30,000 a month. So 30,000 times 12, because you're doing it for the year, you're getting, well, it's 30,100 really. So it's 30,100 a month times 12 equals $361,000 a year, okay? Now we still have to subtract the taxes, which are $40K, and you have to subtract, just leave the management fee out. It's not a big deal. And it's honestly probably like 2% at this point because I manage the property myself. That was just to get the traditional cap rate. So here we're sitting at a 12.3% cap rate. This is fucking money. That means if I put $1 million in the bank, I'm getting $123,000 from that $1 million every year. You cannot get that return on your money anywhere else. Now that's the best part of this, is that's just your cash on cash return. So I'm making 12.3% on my money by having it sitting in this real estate conservatively. Remember, that's conservative. I probably do better than that, but again, I'm not bullshitting you. These are real numbers. So I make 12.3% on my money. So on the $2.6 million, I'm being paid, just imagine I'm being paid just keeping my money in those houses. I'm getting 12.3% a month. Now, on top of it, I can do a cost segregation survey or a cost segregation study. And what that does is it advances the depreciation of this piece of property. So because I make so much money from all my other businesses, I need an area to lose money or depreciate money on my taxes. So if you do this this cost segregation study, it allows you to depreciate the asset within 5 to 7 years instead of depreciating the asset over 27 and a half years, which is what a normal real estate would allow you to depreciate an asset at. So you add the cost segregation in there, and that gives you a huge break on your taxes. For me, not that much like it used to be, but it's still really good. Now, on top of that, you have the appreciation of this piece of property over time. So if you look back, I don't know if it probably has it on here, but let's see if there's any previous sale on this. Here it is, right here. Okay. So this house sold, oh shit, it was renting for a while. So it sold in, oh my God, got a long history. Sold July 19th for $900,000 in 2022. So in 2 years, this property, for lack of a better word, over doubled in value, right? So that shows you holding on to the property, one, is going to appreciate. And this is history and time, right? You can see it all over. This real estate in general, in my opinion, is probably one of the best and safest places to put your money as long as you buy right? But I'm getting the appreciation over time of the piece of property, which you see is going to appreciate over time. I'm getting 12.5% on my money, and I'm also getting the depreciation aspect where I can depreciate this piece of property on my taxes on an annual basis. So this is a perfect example of why I do what I do with real estate, and I continue to find these deals year over year over year, as long as this number is more than the interest rate of a high interest savings account or the average return on the S&P 500, which for me, this is strong. 12.3, really, it's probably at the end of the year, if you put all of this together, where I'm depreciating, where I'm getting my cap rate on my cash on cash return, and on top of that, the appreciation of the actual real estate, I'm probably making 20 to 25% on my money, which is unheard of. That's the best you're ever gonna do when it comes, in my opinion, to making money and safe money. You can obviously risk things in the stock market, do things differently, but I try to be a little bit more conservative. So even in my stock plays, I'm ultra conservative. So if I'm making 15% on my money in the market, I'm super happy. So great way to reinvest your money, great way to keep an eye on your money. It's a tangible asset. You can go touch it. And again, if you ever need to sell it, God forbid something happens, you have the ability to sell it whenever you need to. So this is how I look at breaking down any purchase. Remember, the most important thing for me is the cap rate. I went through how you determine the cap rate. You take the annual revenue of the property, you subtract all of the negatives that come with that. So basically your taxes, your insurances, your, whatever, your maintenance, whatever that might be, you subtract that from the annual income of the property, and then you divide it by the purchase price of the property. Now, when I look back at this, and you guys who keep asking me how you can do this when it comes to not having any money, my answer to you is I wouldn't do it. And the reason why I wouldn't do it is the average interest rate right now in the United States is like 6.5% to 7%, even more on income property. So if you take 6.5% away from this 12.5%, that only gives you a 6% cap rate. I can make the exact same money on my money if I put it into a high interest savings account right now at my bank. So I'm not going to risk doing this to make the same amount of money, my money sitting in a bank account just making money, right? It has to be worth your while. So when people are telling you, go buy this asset, get a line of credit on it and then take that money and they're full of shit. This doesn't work. In a market where 4 or 5, 6 years ago when Trump was president the first time and the interest rates were 2%, yeah, fuck yeah, that still works. Take 2% off 12%, you're still making 10% on your money. But right now, this doesn't work. So in my opinion, if you're waiting to get into the real estate market, and this is something you're passionate about, you gotta wait for these rates to get below 3%. If these rates get below 3% and you're finding properties at a 9 cap, and then you subtract the 3 and you're still sitting at 6, 7, 7% cap rates, you're in a good place. My opinion, this is how I break down real estate. This was my last buy. This is all real shit, guys. I'm not bullshitting. So I hope you enjoyed it. I can do more stuff like this. I have 2 other properties that I can do cap rates on. where I did get mortgages on them, I only did mortgages on, I put down 56 or 57% per property. So obviously the interest rate was super low and it was only on half of the value of the property. So it made sense for me to be able to rent them and Airbnb them. But I can break that one down so you guys can see one that has an interest rate attached to it. But this is how I do my shit. Again, you guys will see. I'll actually have Brandon, because Brandon's staying in one of these right now. He's staying in the studio. So I'll have Brandon do like a little tour of the property when he goes back so you guys can see it and you guys can see all the vote slips that I added. But this is what I do.